Let's focus now on medical expenses. Medical expense recoveries differ from lost wages. With regard to damages for lost earnings, we assume that the accident had no effect on the marginal value of consumption. But here the case is different, since increased medical needs change the marginal value of consumption. Injured people frequently require expensive medical treatment and receive damages awards to cover these costs. When it comes to medical expenses, it is plausible to assume that the medical treatment is important enough to an accident's victim's welfare that the individual could not be made better off by purchasing something other than medical care. Let's go back to Bob, before he was injured. Suppose that if he had received $1,000, he would first buy a new smartphone for $500 and his utility happiness from it would be 100 units of happiness, and then a new tablet for $500, generating utility, namely happiness, of 80 units. That means his utility happiness from the last $500 would be 80, right? But Bob, as you already know, was injured. Now, let's say his medical expenses are $500. You all understand that this treatment is more important for his well-being than either the smartphone or the tablet. So he would definitely spend his first $500 on this medical care. The last $500 he would spend on the smartphone, generating a utility of 100 units of utility, of happiness. So look what happened. Before the accident, Bob's marginal utility from his last $500 was 80. After the accident, his marginal utility is 100. He derived greater marginal utility from medical expenses than from any other consumption goods. In our example, the smartphone or the tablet. After the payment of his medical expenses, treating his food, the marginal value of consumption will vary with his level of consumption. Going back to our previous numerical illustration, let's examine now damages paid for medical expenses instead of damages paid for lost earnings. So again, we take you and Bob as our example. Each one of you earns $50,000. Now, one of you, we know it's Bob, incurs $50,000 of medical expenses as a result of a personal injury and receive compensatory damages, in addition to his $50,000 in wages. So now he, that is Bob, has $100,000 of income. If damages for injury-related medical expenses are fully taxed, then now the tax base that the government sees is $150,000, $100,000 in wages, and $50,000 of medical expenses. The government still needs only $40,000 of tax revenue to finance public goods. That's 26.67% tax rate out of the $150,000. The uninjured taxpayer, we know it's you, will pay a tax of only $13,333, which is 26.67% of your $50,000 of income. You will be left with an after-tax consumption of $36,667, resulting in a utility, that happiness, that is the square root of consumption, of 191.49. Bob, on the other hand, will pay a tax of $26,667, which is also 26.67% of his $100,000 of taxable income. His consumption will be of $73,333. That's the money he got left after tax. But remember, $50,000 of this will go to the medical expenses, and so only $23,333 will be left for him for other forms of consumption. the utility derived out of this last sum would be only 152.75 units of happiness. If we add your utility to that of Bob, we will have an aggregated utility of 344.24, meaning an expected utility of 172.12 under the veil of ignorance. Now, let's check the other option. What would happen if the medical expenses were not taxed? Do you want to guess whether the expected utility would be higher or lower? Let's see together. You and Bob have $50,000 in wages income each. And that would be the tax base, since his extra $50,000 for medical expenses will be exempt. Each of you taxpayers will be required to pay a 40% tax, that is $20,000, to raise the $40,000 in tax revenue that the government needs to finance public goods. Bob will have an after-tax consumption of $80,000, right? But he will spend $50,000 on medical services. Thus, he will enjoy only $30,000 of non-medical consumption. The utility will be of 173.21 units of happiness. You, who were uninjured, will also have $30,000 of consumption with the same utility of 173.21. So the total welfare of society will now be 346.41 units of utility of happiness, which is higher than the welfare, social welfare, of 344.24 under a regime without a tax exemption for the medical expenses. In sum, damages for medical expenses should be tax exempt, as this increases expected social welfare.